Michael, thank you so much for joining me to chat. I am very excited about this conversation.
Thanks for having me.
Yeah. I wanted to start first by thanking you for exposing me to one of my more recently added sort of favorite quotes, where I saw this quote on your website where it says, research is to see what everybody else has seen and think what nobody has thought. And I was like, that's fine. I love that. Like, that's perfect. Because I feel like what most people in our industry are trying to do is figure out, like, how do I think exactly what everybody else is thinking as quickly as possible? Like, I don't want to be thinking what they're thinking a couple months from now. I got to be thinking it as soon as possible. And it's like, that is the opposite of what we should be trying to do. So I really appreciate that. And I also feel like it is very sort of representative for Compound, right? I love how you guys frame the firm as a thesis-driven, research-centric investment firm. And so what I wanted to start with was sort of a like brief biographical sketch of Compound as a firm, because I honestly feel like you guys are an example of what I wish more people in venture was like. And so I want to get it directly from the source. What do you feel like is it about Compound that is sort of unique and special, that's sort of worthy of my idolatry? How do you kind of think about the firm?
Yeah, unclear if it's worthy or special, but I think in general we're very intentional with our wording, right? And in the general aesthetic we put into the world, right? We're research-centric, thesis-driven investment firm. We don't call ourselves venture capitalists. We put those things in that order. We take a prescriptive view. I think Compound generally is built around this idea that in order to be in an increasingly crowded venture capital world and an increasingly hard area to be a consensus and make money, we should be prescriptive, we should be deeper, we should be focused on our own process and be willing to go down with that ship. It started in 2016. There was a previous fund that existed, and when I joined, we kind of rebranded the firm, and Compound 1, our first fund, was raised then, and our approach was kind of trying to build this more deeply research-oriented approach to investing, where we could say the thing that all investors tell you not to do, which is, this is what we think the future is going to look like, and these are the types of companies we think should exist, and doing it in areas that felt non-obvious or harder to understand and parse, because that's how we could make money relative to other really talented venture investors that were candidly just ahead of us and bigger than us and maybe better than us at the time. And so our approach really is like, do a bunch of research, figure out where we think the world is going, figure out what are the ways in which we want to invest against that. Largely, we do that at the seed stage by kind of leading or co-leading rounds, and we do it slow, steady, and at small scale. And I wish a lot of people at venture did that, and I'm also sometimes glad that they don't. And yeah, I don't know. That's like the high kind of like first order principles we have. And I think, the next order is just trying to figure out, as venture evolves and as some of our areas become hotter, we spent a bunch of time early in crypto in 2016 and AI in 2016, and now those have gone through various cycles, figuring out what is our role in those ecosystems as they mature, as they go through ups and downs, as they become more consensus versus less consensus, et cetera. And it's a perpetual pursuit. I mean, I talk about this a lot, but like venture is best when it's a craft. And our view is all venture firms decay slowly over time, and we have to fight against that decay by kind of continually improving at a rate that outpaces it. And that's what craftsmanship is.
A couple of things that I like about how you frame it. Number one, you use that phrase a lot of like, sort of, these are ideas that we're willing to go down with the ship on. Like literally the definition of conviction. And I want to talk more about that and sort of like the convictionless nature of a lot of investing today. But I also feel like the way you've structured Compound, it's sort of, I would imagine if I'm putting myself in your shoes, whatever, in 2016, it sort of vibed very well with your background, because you spent a couple of years at a hedge fund, you'd spent a couple of years doing private markets research at CB Insights. So obviously you've been very research centric. And actually it's funny, I don't know that I've thought about it this way, but I had worked at a hedge fund as well at Co2. And one of the ways that we framed what we often did was like big idea arbitrage, where if you believed in something that it had a larger potential, sort of nominal value at the end, that you can pay higher prices, you can be more aggressive, you can do all these things. And it's actually is like, that is a very hedge fund mentality, but you're applying it to venture investing. Like you say, like most VCs try and avoid saying what they believe, because they say, oh, we just bow down to the founders and we let them define the future for us. But that often leaves them sort of in the passenger seat of like, I'm just along for the ride. Like they said the future was going to be great. Let's see how it turns out. Like how did you guys, were there analogs that you used to say like this is why we think we should do it this way, or if you looked at other firms or philosophies that informed how you guys thought about the world?
I think honestly, just my first job being at a hedge fund and trading long short and derivatives, and it's just like you are forced to take a point of view on the world and have high conviction such that when things run against you, you either know you were wrong or you still believe you were right and buy more. I kind of think it's that. I also just think like there's a more structural question, which in 2016 was starting to become prevalent. In 2025 is incredibly prevalent, which is like, why should this firm exist or any venture fund exist? I don't think that like what some other people believe. I don't think we need more venture capital. Like I don't think that we are like don't have enough risk dollars at play. And so I think a lot of it is just like where's their alpha to be generated as an investor, and where's their alpha to be generated as a partner for founders. Why are we above replacement to another venture firm? To take a kind of framing from sports, and I think that a lot of that comes down to if there is some way to have possibility of generating alpha to see things that other people haven't, the way to do it is to be a better partner to founders with smaller scale and, theoretically, less people on the team and thus less human capital. What is the way to do that at super high leverage, and why does that matter? And so it's really just that, like, I also just don't think there's like a thing that I've said before, which is, there's this view of in venture, you have to like play the game on the field, and, we're vintage based investors. And so the comparison theoretically is to other people in the vintage of the year your fund was raised. I think if you view that as your role, you're just beta to the market. I don't think that that's really why someone should pay very hefty fees, which is what they do to invest in venture funds. And so, I don't know, we take the idea of managing people's money very seriously, and don't think that, an LP told me once, like, we don't want you to manage risk. Like we diversify our risk outside of you. And so you do what you believe most, and like, that's fine. And so I kind of think we often should be the riskiest dollars that anyone deploys, period. And hopefully that, does well.
That's a solid LP. Like that feels like somebody who understands more the sort of like systemic potential that the asset class is supposed to have, as opposed to the sort of like very sort of idealistic view that most people take.
Yeah, they're not in any of the big funds, so
that's not surprising. That's not surprising. Well, speaking of, so I feel like the firm is set up in a very deliberate way. I also feel like the team that you've built, speaking of like how do you think about really specific leverage, it feels like your team is very unique to any other firm. Like I feel like everyone on your team has a very atypical background as an investor, but are usually like the smartest people that I come across. Like it's a pretty solid collection of people. And so I'm curious to walk through, like we talked about your background a little bit. There are folks in your team that have, PhDs in, I think, biological sciences and things. There's folks that have gone super deep in crypto and cryptography, but you also have a sort of deep bench of venture partners who have really deep experience in automation and robotics and AI. And so maybe walk me through the framework for how do you think about like what's the special sauce that somebody that you want to see in someone for to want to bring them into the sort of compound team?
Yeah. So for a long time, from 2016 to 2020, we didn't hire anyone. And then in 2020, we made our first hire, a woman named Nicole, who
amazing. She's great.
She's amazing. And I found her on Twitter, basically just like obsessively and chaotically tweeting about AI research papers and other things. And she was debating whether or not she wanted to go work at a big tech company or do something else. And I DM'd her and said, why don't you not work at a big tech company and figure out maybe you want to do venture, and here's some books. And she read them all. We hired her without having ever met her because COVID happened. And I think from that year onward, we've hired one person per year pretty deliberately. I think for us, like we know that there are a few core things that matter. The first that we always say is like obsession. Like we are an obsessive firm, and you can view that through the lens of our Twitters, which is like highly chaotic, but highly obsessed with the areas we spend time in. And it's also shown through kind of like, we're always online, always talking about different ideas. I don't think this is a firm where we view our job as like not fun and like done at any point. And so I filter for that. And second, I think in some of these areas, the dynamics are so nuanced and the rabbit holes are so deep. You want people who can specialize while still having a frame of reference of like, people frame deep tech as sometimes about like the adjacent possible, or, for us, like the ability to speculate on futures that they believe in. And so biology was a big one for us, and we felt that biotech broadly was going to be one of the largest beneficiaries of automation, both on the software side and the hardware side over the next decade. And we knew that we wanted to continue to have expertise there. And so that's why we brought in Shelby, who has a PhD in bio, as you mentioned, and also has that kind of, lack of like risk aversion that normal PhDs have, and kind of a fuck you attitude to the institutions. And we think that's important to be a good, successful biotech investor at the seed stage at a small fund. SMAC, similarly, we had been tweeting and talking on Twitter for a long time. Pseudonymous investor, has been around crypto for a long time, has a background in traditional finance as well. But for him, it was very easy to understand how he would bring a very different lens, both on the crypto side as well as on very prescriptive views of what he believes the future looks like in the world. Both of those people, I think, embody the thing of Compound, which is like we are a very generative firm, and our view is how do we continue to generate creative possibilities within technology and science. And Mackenzie, as a researcher in our team, similarly, non-traditional background, has worked in traditional finance and kind of other types of investing roles in the past, and really was just an obsessive researcher who blogged a lot on his personal blog before coming to Compound, and has the ability to traverse all sorts of areas. For his interview process, we asked him to do a research project on like what comes after Transformers, and gave him 72 hours, and what came back was like 30 pages on basically the future of AI over the next decade from an architectural perspective. And so it's just very clear that those types of areas allow us to do what other firms are afraid to do, which is speculate on specific futures on a reasoned kind of like sequential basis. And then the venture partners kind of help with maybe zooming back down into how do you operationalize these companies that are trying to do things that have never been done before. I think a principle of Compound that we talk about privately a lot, but maybe we don't say as much publicly, is we think we're pretty good at investing in like N of one businesses at the time, which companies that don't really look like other companies in the moment, and that's rarer and rarer. But we're not very good at like picking the best of the 5 companies. So like we don't have a legal AI company that we've invested in. We don't think that we can make money that way, or rather if we can, it might just be lucky versus like an actual edge. And so I think our venture partners help us and help our founders reason through these like N of one style problems that a lot of these businesses have. And those are people who are highly specific, maybe not always the flashiest names, but actually are just like great operators in areas like data science, machine learning, consumer bio, stuff like that.
I heard a founder once describe you guys as probably the only Twitter native firm out there.
I love
like
that.
you literally can see your guys's like thought processes bleeding out into different posts and threads and thinking about things. And if you map that with the research that you publish, you can see where the sort of atoms form into a specific cohesive idea, which is super rare. Even like as you're talking about the interview question of like, hey, like go speculate on the future of this specific infrastructure or whatever. Like that's so different than like, let me give you 3 companies and you tell me why, which one of them is good or whatever. Like it's a totally different framework for how someone's brain works. So before I'm going to talk a ton about research, before we do that, so we've talked about the firm, we've talked about the team. I really quickly wanted to give you the chance to articulate the fund specifically. So how you think about fund size and sort of check size and things like that. And maybe a little teaser as well on think about your fund strategy. How do you maintain that in a world, we're talking more about this, but in a world of like increasingly louder and louder and bigger and bigger. And, I think just recently it came out, Andreessen is raising a $20 billion fund. Like, how do you exist in that world? So what's your fund strategy? And then how do you sort of counter position yourself to a louder?
Yeah, I mean, our core principles are we deploy over really long periods of time. We love time diversity. Our first fund, 2016 vintage, second 2021, third will be 2026. So these are 5-year long investment periods to build portfolios. We're highly concentrated. We write checks between $800K and $2.5 million to lead or co-lead rounds. We do it all at the pre-seed and seed stage, and we do it across these core areas that are taking large amounts of science and engineering risk, and largely in North America and Europe. And I think the other thing that we kind of believe is that this approach is, highly alpha generating at the very early stage, where there are people who just don't want to spend time doing non-consensus things or things that look weird or have a lot of need to believes and second and third order reasoning. And then also on the kind of like later stage side. And so we have some investing things that we do that are more on liquid assets as well. And I think that partially is my background, and also is partially just where we have started to notice increased kind of dispersion and increased impact on larger at scale businesses in the areas that we spend time. We think those are only going to kind of materially accelerate. And I think in terms of like, as venture grows, like we continue to believe in just raising small funds and doing what we do. And I don't think we have like the ambitions to go and try to compete at Series A like a lot of firms do. It's less profitable on a fee basis, but hopefully the carry side makes up for it. And I think for us, like we're pretty boring. Like that's what we do. We focus on this craft. We don't care about accumulating power. We're not going to try to make our way into the White House at some point in the next decade. Like we just want to help really ambitious people, often who maybe have slightly off-center backgrounds or are first-time founders doing very ambitious things. Hopefully why founders want to work with us is because we are pretty high EQ and like relatively high and specialized IQ in these areas such that they don't have to give a bunch of context ahead of time when they, want to work closely with a partner. I think we are something for someone. We are not everything for everyone.
I love that. You mentioned liquid assets. Is that primarily on the crypto side, or will you do stuff like take positions in public equities?
Both, yeah. Long, short, public and liquid assets in crypto.
And is that all out of the same? Have you structured it so it can come out of the same fund or different vehicles?
Different vehicles for sure.
That's good. Yeah, that's good. That's I didn't know the sort of diversity in terms of the asset side. Because it's always interesting to me too, because it feels like classic kind of venture can feel like really trying to like nail a couple of different rings with one very small arrow at the same time, where it's not just about having the right idea, it's having the right idea with the right person at the right time at the right round that fits your funds. You're hitting everything exactly right. But it's like, if you really are, to your point, the wording is very deliberate. If you are thesis driven, the thesis comes first. Here's this idea. If you find a opportunity to be able to, put capital behind that idea, even if it's not at the seed stage, that's fine because the thesis is sort of in the driver's seat.
Yeah. I mean, I think like we are at a moment in time, in our opinion, where like there's really high dispersion even before this past week, and there are like a lot of a very high number of dark forests to navigate across economics and technology and science. And our job is to prescriptively navigate like those dark forests / idea mazes in terms of how value will shift. And so our entire process is oriented towards that and working with founders to do that. And sometimes the underwriting on the founder side is like the people who can take the most shots on goal to figure those things out quickest. And other times people that have incredibly precise views and can execute over long periods of time very, very precisely with very high cadence and very high competency. And we think about a lot of those things depending on the space we're operating in.
So we talked about the first part of being sort of thesis driven. Research centric comes next, right? With research at the center of everything you do. I wanted to sort of talk about the research playbook that you have, because what I really like, people talk all the time about like building in public or whatever. And I genuinely do believe so I've been writing my blog for, this is my 4th year. I haven't missed a week. Like my only goal was like, I just want to write something every week to put it out there. And it has 100% demonstrated the power of this idea of putting vibes out into the universe and see what responds to you, because you just don't know who's thinking the same things or whatever. And they're often going to stumble on the same ideas. And you guys have this really awesome thesis database where you'll sort of codify these ideas of like, here's kind of how we're thinking about it. Here's some of the reading that's informed us, whatever. And it's just this big Notion database of a bunch of different things, which is like, feels totally antithetical to what any VC would do, because they're like, this is our edge of like how we've thought about things or whatever, but you're putting it out into the universe. So walk me through how you think about the research playbook for what you guys do. Like, how are you dictating your time? Where are you going deep? What are the best sources? Are you getting those from people versus, just reading a ton of research papers? Like, what does that look like in practice?
Yeah. I guess I'll kind of scattershot it. I'd say that the general process is read, listen, write, read, listen, write. And those are like kind of a cycle. So usually we try to build like foundational views on our own. And that comes from, we have some apparatuses in which we use to track research papers. That sometimes comes from looking at like GitHub repos, spending time in Discords, whatever it is, depending on like the category. We then try to often or sometimes build one-pagers or little databases or kind of mini views on our private research repo. And sometimes we'll share those with friends or other researchers or operators at companies or whatever. And that will help people point us in the direction of finding unknown people. And then it's having conversations and saying like, hey, why you want to talk to Compound is not because we are going to pick your brain, quote unquote, or there are kind of like other framings for it, but instead we're going to have a point of view and you're going to want to spar with us, or you're going to be like, wow, this is great. I've never found someone who wants to talk about this thing. And, please, let's chat. And so a good example of that maybe over the past year is like probably for the past 18 months now, we've been like pretty interested in biosecurity as a concept. And one of the most interesting things is just there's no commercial companies really focusing on this. Obviously, Ginkgo has a small group that continues to operate in this. Palantir has a group within bio, but we built a doc that kind of outlined a bunch of the areas that we thought were interesting, and the philanthropic community actually took hold of it and kind of pointed us to a bunch of different people, and that allowed us to further refine our thoughts, further figure out what the right customers are. And then there eventually does come like the traditional, how do you understand customer development? How do you understand sales cycles? How do you think value accrues? And also like the biosecurity one is most interesting because it's kind of, you get to a point where like, what are the need to believes, right? Like if there isn't a venture company really working on this, usually the reason is because there's like a high level of uncertainty somewhere in the journey. And in biosecurity, the obvious answer is it's very easy to reason how you get to like 10 to 50 million a year in revenue. It's very hard to reason how you get to like 150 to 300 million in revenue. And that means that you kind of can talk to people about the logical gaps in company building and like, hey, if you want to build a company here, we're going to figure out in year 3, 4, or 5 how this actually becomes venture scale. And that probably means that there's a bunch of funds that won't touch this area for some time. So anyways, that's more of a specific example, but I think a lot of it is just that process. And then we do these things internally where we have thesis development sessions where once every 3 to 4 weeks, we block off 3.5, 4 hours on our calendars and everybody brings 2 70% baked ideas basically around, hey, here where companies should exist, or here's a specific thesis I have. And we try to talk through them and reason through them as a team. We invite people from the outside to come in. Sometimes they bring ideas, which like opens up our aperture more. Sometimes they push on our ideas because they're an operator at a company that we're talking about or something. And that helps us kind of do the thing that I think is also really helpful, which is it allows everyone on the team at any given time to have context of what everyone else cares about. So when you have a team of specialists and when you have a team that is trying to be highly generative, you have these end artifacts that are like a little more polished, which is writing. You have these kind of like middle funnel artifacts, which is like the thesis database, but you don't have a lot of like shared understanding of the top of funnel stuff happening in all of our brains. And this allows us to be sitting in a meeting and be like, oh yeah, like, Smack can be talking to someone and say, oh, Mike actually is interested in human challenge trials because he talked about this 2 weeks ago. Like, I don't have all the answers, but I know this and this is why he's interested in it. You should talk to him. And I think in a lot of firms, there's just a lack of shared context at that layer of like the kind of early ideation layer. I think USV is probably one of the firms that does this best. And, we've actually done like shared partner meetings with USV where we've talked through a bunch of theses independently, and we have a close relationship with them because I think we kind of operate in somewhat similar ways and obviously in sometimes very different areas. And so that's kind of like the high level apparatus. And the last thing we do is we host these like research days where we bring together purely like 70% people who are not building companies yet, researchers, operators, maybe people who are in academia, and say, hey, here's an area we're thinking about. We want to bring some startups that are interesting and early, working on some ideas, but we also want to hear your ideas around where you think the industry is going, maybe abstracted away from your job. And that creates a node where we just get to see like the weirdest people hanging out and talking about stuff. And also sometimes like debating stuff. We held a biohacker research day last year with USV, and in the middle of one of the presentations, like 2 of the researchers got into an argument like in front of everyone. And it's really interesting to see. And I think the beauty of venture is like we have the ability to partner with founders on both sides or various parts of this like idea maze or value creation path. And seeing those debates play out in real time allows us to kind of draw clearer lines of where the different paths of the industry might lie. And so it's a chaotic process, but we try to introduce consistent cadence such that there's some organization. And maybe the last thing, which I think is maybe most unique, is we try to do these, I guess, speculative fiction writings that we put out. And the reason why is that I think as industries mature, they become very consensus at a high level and very unclear at a meta level. Version of that could be AI today. Everyone like kind of knows AI makes sense and it will be big, but people have shifted their conviction on what part of the stack is going to accrue value to time horizons, et cetera. Crypto has always been that. It's like highly cyclical, highly low conviction, high consensus. And so we try to instead understand this idea of on a year-by-year basis, how will these industries change? What will happen? What won't happen? What will the big companies do? What will the small companies do? And we put out speculative fiction that basically allows people to have some frame of reference for how we think about things on precise timelines over the next 5 to 6 years. We did it in crypto. We've done biohacking. We have some internal stuff on robotics and machine learning. And I think it also helps us sharpen our view because of the like canonical wisdom of if you're being too early is the same thing as being wrong, which I think is a bullshit quote, but like it's a quote that people have. And so we try to take that prescriptive viewpoint to like a local maximum of, hey, this is exactly what's going to happen in 2026 versus 2029. And I think it also allows founders and other people who are ambient to the spaces that we care about to come to us and say, this is ridiculous, or wow, it's so cool that you guys have this point of view. Let's talk about it.
That's I'm like salivating. That everything you talked about, like there's so many pieces to unpack. Like the first thing I want to talk about is the USV stuff because that's exactly where I was going to connect to next anyway. And so it's so interesting that you guys collaborate. And then I want to talk about the speculative fiction stuff too. But on the USV front, a couple weeks ago shared a video that I thought was great. It was an interview with Fred and Brad, and they were talking about they're I can't remember if they're in their like 70s or late 70s or something like that, but they've been around for a while and they're still like first in the office, excited about the job, whatever. And the reason that they get excited about it is because they are allowed to be, and the way that I tweeted it maybe sounded meaner than I meant it to, but like they like it because they get to be the dumbest person in the room, where like they get to come in and have like really smart people come in and want to talk to them, and they're not just doing it out of the goodness of their heart, they're doing it because they can write a check. But there is this like really interesting dynamic that you imagine want to try and build with these very intelligent people, where the currency that you're bringing, to your point, is not always like, hey, we want to invest in what you're doing. The currency that you're trying to bring is, we have gone deep on various aspects of this thing. We want to engage with you not as, I don't know anything, come teach me about it, but as like, and not that that's what USV doing. I think you guys have a very similar worldview where it's like you try and be very, again, like let the thesis drive. And then as the thesis drives you into these different pockets, you try and engage with folks. But I feel like that's one of the things that can be the most difficult. Maybe I'm wrong, but it's like these people are obviously, I imagine, like they're very sharp folks, but also like very busy or highly sought after, or a lot of people want to pick their brain, to your point. And so what is the, like how would you describe the mechanism that is most successful for you guys when you're trying to engage? And is it just like, hey, here's the corpus of our work, like let's chat, and they almost always respond to that?
Yeah, I think most people in venture think about writing as a top of funnel process, and it's really more like middle to bottom, which is that like I say it's more like a like a sniper than it is some like wide net casting thing. And sometimes you do things like you'll tweet about this very strange idea that we've put in the thesis database, and people will come out of the woodwork and they want to talk. And in those cases, it's kind of like those people are actually starved for connection because nobody has cared about what they care about. And to know that someone does is much easier. And to know that someone cares about it in a relatively translational way sometimes is also helpful, because like we operate, like we love science, whatever, but we are like pure play capitalists. We care about value capture at really large scale. On the more like hotter areas that everyone's trying to dig into, yeah, it's kind of just like, listen, you can go talk to the investor that claims that they're super excited about, creative AI, but like, here's a 90-page book on animation from 2016 talking about GANs, and here's these posts, and here's and it's more of like, with all things being equal, who do you think you're going to have a more pleasant and or productive conversation with? And I think that there are some founders that candidly like don't give a shit about what venture investors think. And they're like, why? I just want someone who's going to leave me alone and give me the highest price. And weirdly, I think that those founders are like more often first-time founders than not, which doesn't actually make intuitive sense. Because I think that to the point of like, I don't know, Vinod and all these other people, like venture investors are often net negative to companies. And if you've gone through it a few times, you can understand what having someone who doesn't give a shit can do on the downside, and someone who gives a shit but doesn't know what they're doing can do on like the really bad downside. And I think our view is kind of like, hey, we think we know what we're doing. Who knows? We'll see. But like we care, and we are like knowledgeable about the area you're spending time in. And so at a minimum, you don't have to explain the same thing you've maybe had to talk about with a bunch of other VCs, and you're not going to get questions that are the same. And so I think it's more of a way and reason for people to talk to us. And as our firm has grown in some sort of brand, it's worked as top of funnel a little bit more, but there's so much random writing on the internet now that I think it's like, our goal really is to be able to send links that show at a moment in time we had prescriptive views. And that's also why we try not to publish things that are kind of like, this space is interesting, talk to us to find out. And more like, this is why this is interesting and these are the types of companies that should be built here. And if you think we're morons, like we'd love to hear it because you probably are smarter than us.
We get a similar question. So Contrary has, when we think about like talent as a key piece of what we do, where it's like we're trying to identify folks as early as possible, years, in the majority of cases, years before they start companies, and have a platform that is valuable to them throughout their career. And we get questions all the time from other investors that say, I'd love to build a little scout network. Like, what's the easiest way to do that? And it's like, I don't know. The only way we know how to do it is to spend, the better part of a decade like building relationships and letting them compound over a serious amount of time. I think it's the same thing. Like people will be like, oh yeah, like those compound folks, like they write a lot. Like I should blog more. And it's like, you don't understand. Like I keep thinking about the what I want to title this video in my head. I think the thing I'm landing on is this idea of like speculative obsession. Mm-hmm. And it's like, obsession is not incidental. Like obsession is long-term by definition.
Yeah.
And so you guys have to have demonstrated that, which is huge. The last bucket I want to click on before we move on is you mentioned about speculative fiction. There are definitely some really interesting examples that I have seen play out where even the first one I think about is, we're investors in Anduril, and there was a book written a couple years ago called 2034 that basically laid out like a hypothetical future case scenario of how a like large power global conflict could play out. And like a lot of it is like eerily sort of like what it's like the framing of like sort of how different powers have sided in certain ways, like different moves that people have made, how technology has evolved. Is sort of, eerily playing out in that way. And that's not a function of like, he guessed well. It's like that the authors of that book had spent a lot of time thinking about those driving forces and what it would likely yield. But I'm curious if you have sort of analogs for like, oh, this is the type of fiction we've seen elsewhere, whether it's popular fiction or more of the type that you're doing, which is more like tactical fiction, that you look at and you're like, oh, that's a really good example of how we like to do things.
I mean, I think we read a lot of science fiction stuff. I would say the closest example is probably like Les Wrong's technology forecasting groups. There's a bunch of people on there who are obsessed with this idea of forecasting generally, and obviously prediction markets play a adjacent role to that. But I think it's more that of like, how do you be precise in near to midterm futures and or bet on, I would argue that the first wave of compound was a realization that the timeline between research and commercialization was collapsing. And if you could see breadcrumbs in research, you should actually expect it to reach its way into production level engineering capabilities or whatever that means, company building, at a far faster time than historically people had thought about in venture. And that thus meant you should be looking at research and betting on like an arbitrage that other people didn't see. I think now it's actually like over-rotated and there's like too many people funding research projects and we're like privatizing, and I wrote this thing called ventureification of research. And like, I think that is now a different problem. And instead it's like, okay, you then need to have a better reasoning of second and third order effects. And the edge or alpha that Compound had is a firm that tracked research maybe exists, understood research no longer exists. You dump a paper into ChatGPT and ask it to explain it like you're 16. And so you instead have to have like much better reasoning. And that reasoning has to be like more precise with more degrees of complexity and with more people kind of investing in deep tech-ish areas has to be, I think, probably like more correct and more risky. And so I think it's just trying to find people that are willing to, with precision, write about unpopular and or strange things. And I think the weird part about science fiction, and you actually can see this if you like try and query some of the AI models to have it write fiction, is that like it's far more formulaic than many people appreciate. And so you kind of have to again, play like a translational role between what people believe science fiction is often structured as and what like the strangeness of reality that we're in today could create. And like, it's not a very precise statement, but it gets at something which is like, it's weirder on very different dimensions than kind of your traditional science fiction where it's like crazy technology is like the technology part. Like we have this saying, which is like, we're only creativity constrained on a go forward basis. Like we actually don't think technology is a limiting factor anymore. And I think science fiction has actually often been built around the idea that technology was the limiting factor to a lot of cascading changes. And so I don't know, that's kind of how we look at the different areas of like speculative fiction. But I think really for us, it's just higher precision, higher risk, and continually understanding why we believe something that other people don't.
There's another element of your research function that you kind of talked about that you had so in your conversation with Bryce at Indy, you had a great line that I wrote down and I've thought about frequently where you say, part of our job and why we write so much and talk so much and do a lot of research is we want the world to believe in what we believe, but 18 to 24 months from when we believe it. and you could frame our research organization as a propaganda shop. And I've been talking about this a lot with our editor at Contrary Research, Sachin Maini, who this idea of like memetics and like why certain ideas catch on in certain ways at certain times with certain audiences. And it's interesting because like they are structurally different muscles, right? When you think about like sort of pure research versus like the propagandizing of those ideas, like they are definitely related because the quality of the idea impacts how capable you are of making it viral.
Yeah.
But they're not the same muscle. And so I'm curious, like when you think about a lot of what we've talked about is like, how do you do good research? How effective do you think you are as a propaganda shop at getting those ideas out there and sort of convincing people to believe what you believe?
I think that there's two parts of it. One is like the quality of your actual propaganda from a like first party basis, which is like how good are you at writing communications, telling the story, helping people understand like the sequencing to a larger vision. I've talked about this idea of like pseudo secrets back in the day, which is like how do you have an idea around a company that makes people feel smart about the company, like they have a secret that other people don't get, because I think that's what drives a lot of buying in like dark pools of capital, which is what venture capital is. And then the second is like, how do you have credibility behind those statements? The latter is just a function of as we've had more time to operate, as our companies have done better, people think we're smarter. Whether or not we're smarter or lucky, who knows? But that helps. The first is, I do think, is about like, how do you have precision around the initial belief and and then continued precision around why these beliefs have changed over time, and how do you communicate those in ways that enable a small set of people to kind of latch onto them. And I think that like for us, we kind of look at it as we want to believe something so that we can make an investment and partner with the founder who obviously believed something on their own. We then want to make sure that we can push forward an idea such that other talented people believe in the founders and the company they're building. They can acquire talent. We then want a very small number of people to believe such that they can further finance a company to then probably run some sort of go-to-market motion. And then if you can do that, and so you can have some sort of credibility around team, talent, and capital, often that is what gives customers some sort of confidence, weirdly, right? Like you intuitively would believe that's not the case, but strangely it is. Once you can get the customers bought in, that creates a different kind of level of credibility that feeds back into the propaganda, such that people don't need to believe just Compound, they don't need to believe just the founders, they'll believe the customers who theoretically are willing to part with their hard-earned dollars. And so I think for us, it's about like sequencing the propaganda and realizing the layers of abstraction. Whenever we invest in a founder, one of the things we often tell the teams is, hey, in all of your updates, you should have three things. You should have, how do you want to position the company to hires? How do you want to position the company to investors? How do you want to position the company to the press or media or like the general public? And you should continually in every update have that written out, because it will allow you to understand how your narrative changes, and it will allow other people to have a top-down view of the propaganda that they should be pushing forward, because there's nothing worse than someone misunderstanding your company and then communicating it. And if they have a bigger megaphone than you do, which in investors' cases sometimes they do, that can be very bad for the founder. So I think it's those things, but like the worst part of our job is we need people to finance our companies after us. And that is like the only reason I dream about having a bigger fund, and the only reason I could ever imagine doing it is for that reason of not having to deal with the other investors in venture.
It reminds me of a line from Palmer Luckey talks about, you don't have to convince everyone. And in fact, if you are convincing everyone, you're doing a terrible job.
Yeah.
You have to convince a very small group of ride or die like stakeholders. And that's true of, to your point, like employees, that's investors, customers. But like outside of that, you actually don't care about how you're communicating it to everybody. And so to your point, it's like almost like the more capital influence you have, or the ability you have to kind of influence that company's success, you actually limit the aperture of people that you have to bring along for the journey, which I think is super interesting.
Yeah, I also think the last thing in general on this is like, it also just shows how unbelievably terrible most public companies are in investor relations. And then there are some that are like too good, and those companies are usually the ones that you short, and the ones that are maybe sometimes better longs are the ones that just need to figure out how to understand the market structure shift when you go from a private company to a public company.
Yeah, 100%. One of the things, I mean, on this sort of note of like storytelling becoming an increasingly prevalent part of these like deeply technical areas, I've heard you talk before about the sort of like barriers to entry in these areas. And historically, you'd have, maybe there's 100 people in the world who were really capable of building something in a particular space. And then suddenly, this is true with every hype cycle, while also enabling some of these very capable people, it also attracts a lot lot of the sort of hucksters and opportunists and stuff. And this happened in crypto in 2021 for sure, right? Like there was a ton of people who were suddenly had never been interested in the space and suddenly were able to raise hundreds of millions of dollars and things like that. For you, when you think about these sort of categories you spend a lot of time in, one of the questions I have is like, is it because it can feel like Twitter made Carnet, like it's like all these people who are like, oh, like I'm an expert on this and I'm an expert on this, I'm an expert on this. It's like now those people are not just tweeting about it, but they are in real life raising hundreds of millions of dollars, trying to put out products, whatever. Like, how do you respond to that? And is it good or bad? Because on the one hand, people will try and say like, hey, like no attention is bad attention. Like if we're bringing attention to a space, that is great. And it raises the sort of public view of this world. But definitely it feels like there are dangerous elements to that type of inflow.
Yeah, I think there are reasons why it's bad. And the first order reason is that many really hard problems are not solved on the first go. And when the companies that rise the fastest are often the ones that are best at accumulating capital and creating a lot of hype, they kind of destroy the financing landscape and the customer landscape for those that are trying to build in a more maybe sequencing or leveled or measured way. Second, the thing that I think is a reality, even though it shouldn't be, is you do have market distortions that take place that like hurt founders, which is you have founders that look around and they say, hey, these other people have been able to raise a bunch of money and I can't. What am I doing wrong? And I would argue nothing sometimes. But again, like markets will market and those things happen and you have to figure out what is the game that you're playing and how do you make sure that if you're going to play the game of perception, you need to be a master at it. And if you're not, then you need to play the game of execution. And if you're anywhere in the middle of those things, you're probably going to die. And so I think it's hard, but like I kind of am just past the point of complaining that like, you know, things get too hot and it's too hard and prices are too high and whatever. Like, no, none of my investors and none of our founders like give a shit if those things are true. Like what matters is if you can execute. And so we have to continually figure out what are the things that we do. And likely that means we need to take more risk. We need to help our founders understand when are they going to kind of inflect on either moving towards telling their story more publicly, perhaps earlier, such that they can box out other competitors that fast follow them, such that they maybe will erode what people used to believe were kind of was IP early on. And I think a lot of this we've talked about in framing of like AI companies, which is people used to believe models were the moats, technology was the moat, and our view long term is like brand and pace is the moat. Like I think one can look at Runway as the best example. They're the best product team in AI in our opinion, and they ship at a rate that is absurd for a company of their kind of scale. And I think that kind of is like what you need to do in this new world in which more people are able to get capital for less than ever before if they play a certain game.
I tend to agree. I think the area where I like struggle is this sort of like poisoning the well dynamic. And one area you can think about this is kind of the top of funnel of like innovation as like a catch-all term, right? Of like where people are doing the thinking. And it reminded me of, because this is, and you've pointed this out, this is a key insight that you guys had. You talked about this a little bit in the venturification of research and stuff, where this belief that the time between commercialization and research was sort of collapsing. So it's being kind of pulled forward. And it reminded me of a conversation I had with a Cambridge professor in 2014 who was like really struggling with the kind of incentives inherent in the academic institution, where he said that the vast majority of research papers effectively get read by three people, where they get read by like the author, the editor, and the publisher, and that's it, and then they just kind of die. But like that's what you're incentivized to do, is just like create research that effectively dies, because that's all that matters is, are you getting published? But now it feels like you have had this sort of, you know, people have almost like weaponized the like commercialization engine of like they've reached into the research apparatus to like rip forward the work that's being done into the commercial world.
Yeah.
And that can change a lot of the incentives and stuff. So on the one hand, again, I think you make this argument in your piece where like it may, in some cases, it may just change, right? Where it used to be that you would be funded by some kind of, whether it's like a larger company or a research facility, nonprofit grants, whatever. Now more of that is coming from venture funding. But there's an argument to be made that potentially like even the technology readiness curve that you write about, it may not even change. Like it's just different money coming from different pockets. But it feels like there is a world where, I don't know, if there is like a sort of like pure science that like needs to happen in pushing some of this stuff forward, that now because commercialization is so front and center so quickly, you may actually end up doing the work of innovating more poorly because you're so focused on the dollar. Like, do you think that the scientific well is kind of being poisoned to some extent by that focus on commercialization?
Probably in some ways. Like, I think at most points of a deep tech company, you build something that is off or not directly aligned with your product roadmap in order to show some sort of distillable proof point to investors, which is inherently like, decelerating to research, right? Like you're doing something such that other people can be like, okay, I get the idea that this company is circling around, because the core thing would actually take longer than the 24 months of what venture capital allows for. And as an early investor, the other problem is like these things get foie gras so much that you do take dilution along the way. I think that is it bad that there's a framework now that people can accelerate what happens in academia by getting a consistent team working on a problem every day in a capitalistic way? No. Is it bad that those people, for whatever reason, get thrown really large amounts of money and then usually die because of it? Yes. I just don't you make the decisions that you need to make as an investor. And we have passed on a bunch of companies that are really awesome because we thought that they were not going to really prove anything with tens of millions of dollars. And that's just not our model. But if I had $20 billion or $3 billion, whatever, I need to figure out where to deploy those things. And you could get those grants from the government, or you could get them from a big venture fund that gets to, charge fees on that money. And who knows, maybe with a bunch of the government changes, there won't be any funding for any of these things anymore. And then we do need it. So I don't know. I think it's probably net negative for a lot of the founders, but I just don't I'm too biased to try and make the argument that everything should stay in research until it's ready, because maybe that then just looks like a bunch of Mira and Ilia's companies fundraising, where those things were effectively kept in research for 7 years by the funding of OpenAI, and then they spun out and they raised at 500 million to 2 billion post.
Do you believe that sentiment that the volume of capital does not materially drive forward the curve of technology readiness? If you really are trying to figure out what is the sort of cutting edge, whether you have 10 million or $1 billion, that's not going to materially change the progress that you're making?
I don't think it does in many cases. I think people have been kind of saved by the idea of compute being this pretty finite resource that dollars create outcomes in. The bitter lesson was actually the sweetest lesson for multi-stage funds. I think that in a lot of areas of maybe biology and science, there's obviously some minimum viable of can you build, more things in parallel with high resolution and high precision, such that you can figure out the premise that you're trying to prove faster? Sure. Is there still limits on that? I think so. But again, I think everyone has counterpoint to every point I can make on that. So I kind of don't really care about debating it as much anymore.
Well, it's a good segue too into kind of the last bucket of things that I want to talk to you about. And this is something you and I have vibed on before in the past, of thinking about sort of the potential exacerbation of capital destruction. You touched on this earlier in the conversation, where the danger is that if you pour a ton of capital into the sort of, whether it's the hucksters, the opportunists that are chasing a category, and they kind of sully the good name of the category by not producing results, and they destroy capital and they don't produce product and stuff, that makes it harder. I've also heard you describe the sort of time that we're in venture as the lowest conviction time that you've seen in venture, right? And this idea of hey, you kind of have these wandering, passionless souls of people are just I don't know what I care about. And then there's a loudness over here, a sound. And they're I guess I could care about that. And they everybody lurches towards that thing and kind of looks for things that kind of look and feel similar. I always get this pushback because anytime I express skepticism, which is definitely dangerous for any investor to do, but I express skepticism, it's usually about, not necessarily about a technology or specific progress. It is about a specific company, a specific fundraising round or dynamic or what that sets up. And I get a lot of pushback where I'll say hey, I just don't think that this approach makes sense or whatever. And they'll say, oh, well, I'm just really excited about the technology. And I'm don't get me wrong, I'm excited about the progress in robotics or AI or whatever. What I'm nervous about is that if this thing doesn't work, the level at which we have heightened the risk profile because of the amount of capital, and it's still very risky. There is a lot of risk inherent in this thing. If that thing fails, the volume of capital destruction, we might think hey, these big multi-billion-dollar firms, if they write a $50 million check and that goes to zero, that's not a big deal. And it's right, what if they write tens of billions of dollars and that goes to zero? That eventually there is some scale that it does hurt. And my anxiety is always that you look at nuclear energy, whatever, 70, 80 years ago, and it's we had people envisioning a future of every car could be nuclear powered and stuff. That was the progress we thought we would see. And then because of certain things that happened, there was a loss of like public appetite for it. And my fear is that the same thing could happen is like we get really excited about this prospect of like we'd love to see 100 billion AI agents running on automating all these aspects of the world, but we don't get there because, you know, billions and billions of dollars get destroyed. Like that capital destruction is a fear that I have. Like from your guys' perspective, especially when you are at the cutting edge of things that people are starting to spend. Like what's crazy is that you guys are early, but it's like it's suddenly like it goes from you were early to these things and you're developing a real expertise, and then suddenly you have these kind of lumbering giants tripping over themselves to get into it and like throwing billions of dollars at it, and you're like, well crap, we went from, you know, we were early and getting into it, and now it's like you've kind of muddied it and stuff. Does that describe the dynamic that you feel, or would you frame it a different way?
I think it's a very reasonable feeling. I think that for us, our original premise for Compound was that we'd get to areas early, we would understand them deeply, we'd make like non-obvious investments. As those areas matured, we would have institutional knowledge to continue to own and exploit those categories in the same way that Bill Gurley did for marketplaces for 20 years or whatever. The reality is that once those things become consensus, the dollars deployed and the scale at which people haphazardly throw money is much larger, such that we usually just don't play those games. And we have to think about instead what are the non-obvious approaches or like next order things that we think will be valuable that other people don't, which is disappointing and is a lesson we've learned now a couple times. But I don't think if people want to blow themselves up chasing low conviction, high consensus areas, I am all for it. And like venture will continue to cycle and largely be an asset class that the returns are terrible in. And like eventually, if people continue to do that and get it wrong, like you either hope that, you know, there's no money after you go to the Middle East. And so like eventually like someone is going to have to stop funding these things if they don't work. And if they do work, then like, great, we were wrong. And like if we were wrong, as long as we maintained discipline and kept scale down, we can be wrong and still make significantly higher IRRs than other people, such that we can stay in business and help support our founders and all those things. So I guess like it's a disappointing lesson. I think it's true, but I don't think that like an increased burden of proof for founders is a bad thing at this stage of capitalism. Like I think we are at a point where we are willing to take a single data point and extrapolate it so far that it wouldn't be bad if we knocked it down a little bit. And I think we started to see that in 2022 as like multiples compressed, as markets started to readjust, and as people kind of didn't know what to feel or think about the next generation or wave of technology. And AI kind of was like, changed that dynamic and actually I think stopped a reset from really happening. And the last thing I'd say too is like people also just don't appreciate the market structure shift that's happened in all of investing, which is people our age have largely operated in the greatest bull run in history, in which like every single time anything goes wrong, you just buy the fucking dip of the thing and you have been right. And you do the most obvious consensus trade and it has paid off significantly more than anyone has ever thought, which is like the compounder, you know, tiger cub type thing. And I think that like that market structure shift probably means that eventually there will be a different one. Our view is just continue to pay attention to what are the dynamics that are creating all of these behaviors. And largely, we are never going to be able to play the consensus dynamic. And that's what people give us money for. That's why we are small. That's why we're the riskiest dollars, all these things we've talked about. So like, will there possibly be some companies that don't get funded or, you know, have a harder time raising because of scar tissue from other investors? 1,000%. Does it mean that they need to build real businesses faster or they need to execute or tell their story better? Yes. I don't know. I guess I'm okay with that. But I think some founders are probably going to be annoyed that I said that.
But it goes back to your point about you're not trying to build everything for everyone, right? It is a very specific sort of audience for what you're doing. Well, listen, man, with that, I think that's a great place to wrap it up. And normally I say, you know, where's the best place for people to go to learn more about you? But we've talked about it, that you guys are a Twitter native firm. And so digging into your guys' Twitter and your writing on your website is obviously the best place to get smart on what you guys are doing. So I appreciate you walking me through the playbook.
Yeah, I appreciate it. Thank you for asking questions.